Hello and welcome to episode 467 of the Money to the Masses podcast with your resident expert as always, Damien Fay, and me, Andy Leaks. Damien, you look happy. How are you doing?
I feel happy, Andy. If you're watching the video version of this podcast, you will see that I am beaming, and probably like everybody else who's listening to this show on Sunday morning, then we're all excited about the prospect, obviously, England in the European final. So fingers crossed we can do it again. And I do say do it again, obviously, because the women had done it previously. I was at that final actually with my daughter. So fingers crossed, Andy, we can bring it home.
Double European champions. It sounds nice, doesn't it? Right, so let's get on with what we've got coming up on this week's show. What have we got? Three pieces as usual.
Yeah, so I'm going to take a break from investing this week, but I've got two other exciting pieces. You've got the third. The first piece I'm going to be doing is in relation to the general election. So we've had a landslide victory by Labour. So what does that mean for our personal finances? There's been a lot of speculation and a lot of newspaper articles written about what this could potentially mean. So I'm going to wade through what people are saying about this, what this landslide victory could mean for your personal finances. I'm then going to go on to a piece that everybody needs to listen to. I want to inspire people to make a change this week to their finances, to be or do something different. And the final piece, Andy, you're going to be covering a bit of research in relation to car insurance.
Yeah, specifically car insurance renewal. So there's been some research as to the exact best time to the day when you should be renewing your car insurance. So I'll quickly dig into the details and work out how much you could save depending on when it is you renew.
So I'm going to go straight on with the election piece. So as I said, Labour had a landslide victory, which was widely expected. And people are now thinking, what's this going to mean for everyone's personal finances? So what I'm going to do is I'm going to run through some of the thoughts that are coming from the great and good out there, particularly some analysts, but also what the journalistic community is saying about what's going to happen to your personal finances. So the first thing I'm going to say when I kick off this piece is that I think the Labour government is going to err on the side of caution and not try and do too much. So normally when you get a new government, you tend to get a budget pretty quickly where they set out their stall and they start to make changes to implement their manifesto. Now, the Labour government obviously came into power off the back of a manifesto that didn't have many bold statements or policy promises. So I think what they've done is tried to learn from the lessons of history. And I'm talking about Liz Truss's infamous budget, which obviously caused complete chaos when it comes to interest rates in the UK. So they are trying not to rock the boat. And actually the anticipation or prediction is for the budget perhaps not to happen until maybe September. So we've got a while to wait yet. So like I say, not rocking the boat as such. But what about the other promises or statements that have been made in the lead up to Labour actually winning the general election? Is there anything in there that we can take and sort of discern what could potentially happen to our finances? So I'm going to run through some of them. As I mentioned, we're not going to have the first budget anytime soon, it doesn't seem. So we're not going to see any immediate changes. Now, this is probably going to be a piece that's going to be based upon a lot of what Labour didn't say rather than what they did say. So in Labour's manifesto, they didn't include tax cuts, but they did commit to not raising national insurance, income tax or VAT. And they've also committed to freezing the income tax thresholds. And that will technically push even more people into higher tax bands. So that does actually increase the overall tax burden on the UK population, but it does in a way increase the amount of tax that they generate. So Labour hasn't said they're going to make tax cuts, but they are still going to maintain the status quo for now. So we aren't going to see that drop in things like income tax or VAT. Now, there is no commitment either when it comes to capital gains tax. So there could be potential increases in capital gains tax. That's where there's been a lot of speculation as about what might happen, because they weren't addressed in the manifesto. So there was nothing said in particular about capital gains tax. And that is probably quite an easy thing for them to go after. So there's a lot of speculation about that maybe there could be a change in capital gains tax that might, in the first instance, affect landlords, for example, so people who have second properties. Now, there are rumours, again, it's only rumours, about potential changes to inheritance tax. So we could see new levies, and the idea of that is it would try and redistribute wealth. Now, when I say these things that could be potential rumours, people shouldn't be going out there and trying to make changes based upon this. Now, there had been anecdotal tales of people trying to rush ahead of the election to make changes, maybe sell assets that they had in case there was going to be a change to capital gains tax. Those sorts of things are perhaps a little bit hasty. People shouldn't be making financial decisions based on speculation. As I say, it does seem to be at the moment that they won't rock the boat. Things will stay as they are for a while, but there is that potential change to capital gains tax that people are talking about, and inheritance tax. Now, the one change that we do know, or that has been promised, is the scrap of the VAT exemption that's enjoyed by private schools on their private school fees I'm talking about, and they will apply business rates. So people who may send their children to private school could be about to see their fees go up by effectively 20%, and that's ignoring the fact that the schools may pass on some of the additional costs as well. So VAT exemptions on school fees is apparently going to disappear. So if that impacts you, then do bear that in mind. Now, there is going to be, again, as promised, a scrapping of the non-domicile tax regime, which ends the tax-free foreign income that people can have for up to 15 years. So that is something that is only impacting a small proportion of the population, obviously the super wealthy really, and that is going to change. If we're looking at things like pensions, there was speculation at one point that Labour would reintroduce the lifetime allowance. Though for people who don't know, the lifetime allowance was that limit. It was a sizable limit. It didn't really impact people, above which you would then be effectively paying a tax charge on the benefits when you took them above a certain limit. So that's what the lifetime allowance was. That has been since abolished, and Labour have said that they won't bring it back in. So there was rumours that they would, and then there seems to be statements that suggest that they won't. So at the moment, it doesn't look like the lifetime allowance is going to be brought back in, or there's going to be any changes. The state pension triple lock is apparently to be retained. So that is something that will please people who are claiming their state pension, because that obviously offers that inflation protection. Now, there is some debate about pension tax relief and annual allowances. Now, that could be an area that there could be change. Now, if I had a penny for every time I've heard in the past that there's going to be a change to the annual allowance or the pension tax relief regime, then I'd be incredibly wealthy, and I'd probably have a really huge pension that I'd put it into that. So we have to wait and see, but that is again something that is being speculated. Of course, if you remember, in recent years, we had an increase to that annual allowance, didn't we? So we can now put potentially £60,000 into a pension and claim tax relief. Now, the other area where there could be impacts is in regard to housing and renters' rights in particular. Labour have said they will abolish Section 21 no-fault evictions, so that will empower renters to challenge unreasonable rent increases as well. There is going to be a freedom to buy scheme apparently to support low deposit lending for first time buyers. Now, depending on who you listen to, this sounds a lot like the current mortgage guarantee scheme that exists. So that is something that will impact probably the ability to get a mortgage with a low deposit. We've got to wait and see. So there are other areas where the Labour government has said they will potentially support the housing market in terms of house builders. So that leads on to something when it comes to sectors of the economy that could be boosted. One of them is the area that relates to renewable infrastructure, so energy, also building materials, so house builders as well. So that's something to potentially look at. But what you'll notice, there is a lot of speculation, and I still think what we're seeing is a case of not wanting to rock the boat. Now, anyone who's listened to recent podcasts will have heard me talk about the potential impact of the general election on investment markets. It's generally positive. Now, what we've seen is the FTSE 100 hasn't really done much since the election results were announced. I know they're widely anticipated, but the FTSE 250 has risen by about, I think it's between 1% and 2% as I make the podcast. And now that is obviously because there's been positive news. People like certainty when it comes to the domestic economy. And of course, the FTSE 250 is more domestically focused than the FTSE 100. Most of the earnings in that actually come from abroad. So the lion's share actually are exposed to currency moves, for example, in the pound versus the dollar. But some of the boost to the FTSE 250 could also be because we've had some good news on the strength of the UK economy as well. So to sum all that up, there is an element of uncertainty about what the impact of this Labour landslide will be. Of course, it does mean that they have an increased chance and ability to push through any changes they do want to make in the future. But as and when they come, we can talk about it on the podcast. But it would be remiss of us not to discuss the topic, because it is something that I've been asked about. And even though it does feel like there's not much to say, I think we had to cover the topic on the podcast. And as I say, we'll see what happens going into the autumn.
Okay, so moving on to the next piece of the podcast then, Damien. You've got a piece on the changes people can make and the impact that those changes can have. What have we got?
So if you go back to podcast 393, I covered a piece, or did a piece, on building good money habits, and it was based off a book that was written by a guy called James Clear, and it's about techniques you can use to become better pretty much at anything and build positive habits, and actually how to get rid of bad habits. And I took the idea and applied it to money. But what I want to talk about today is slightly different. I just want to reference that so people can go back and listen to it, because you can build good money habits and become better at money if you do very small changes and you build upon those. But what I want to talk about this week is about making a small change that becomes part of who you are. So by that I mean that we all talk about who we are. We have this internal dialogue that's attached to our ego. And if you ever want to hear a book about ego, go and read The New Earth by Eckhart Tolle, which is an incredible book. And it talks very much about what the ego is. It's not how most people would think about it. It's about the things that you attach to yourself that mean who you are. So for some people, it could be about the type of person they are, the things they do. They could be, for example, somebody who classes themselves as a saver, somebody who classes themselves as frugal, somebody might class themselves as being very green or ethical. And all of these things become part of who you are. And the dialogue that you have starts to impact how you will behave and where you might encounter situations and how you deal with them. And so it got me thinking actually about, we should try and step out of our comfort zone, and we should also try and challenge some of those things that we attach to who we are. And by that I mean that there'll be people out there who may be sitting there thinking they're no good with money, or they wish they could save, and they should try and make a change that starts to move them in that direction. And what I want to do is give people some examples that are really food for thought. And it also goes back to that proverb about the journey of 1,000 miles begins with a single step. And all I want people to really do is try and make a step in the right direction. And so this could be somebody who has never saved money before. They find it difficult to put money aside. And what I want them to do is just try and put some money aside this week, a small amount. And even better, if they could try and set up maybe a standing order into a savings account, because it's very easy to set up a savings account online, particularly even with your existing bank. And just put a small amount every month into that savings account. Because then what you've actually done is become a saver. So if people say, are you putting money aside? Yeah, you are. It doesn't matter the amount. What you've done is made a step on a journey that you are much more likely to take because you've taken that first step. And so if you think about any journey, Money to the Masses is a brilliant example. So there was a point where I had a conversation with Justin, who's my twin, during a lunch hour about what I wanted to do with life. And I just came back from there, and that evening I decided to start Money to Masses, started a blog. I didn't know what it would become. And in doing that step, we are 14 years later doing a podcast. We have a site that's visited by millions of people. We have YouTube channels and social media, and we've helped so many people because of that first step. It was that first step that made all this possible. So what I want people to do is start to take a first step. Think about a step that you need to take or want to take. So by just saving a small amount of money, you are now becoming a saver. You've changed your internal dialogue away from somebody who might spend money to somebody who starts to save money. Now you might want to be somebody who starts to repay debt. And so paying more than the minimum, even a small amount than the minimum repayment on a credit card, means that you are starting to pay down your debt rather than just trying to keep afloat and paying that minimum. By just overpaying a bit, you are somebody who is clearing their debt. And so once you start that journey, then you are more likely to try and continue it and do more. And now the reason that's true is because there is something that salesmen do to take advantage of human nature. Now, there is a technique in sales that you don't try and sell something to somebody for the full price straight away. So let's say you had something that was worth a couple of £100. If you went up to somebody you didn't even know, maybe you'd had an introduction to them and asked them for a few £100 for the product that you have, that's a much harder thing to do than if you asked them for, say, 99p. Because people are more inclined to give you a small amount of money than they are a large amount of money, because of the decision. The barrier to that decision is much lower. And so they'll sit there and more likely give you that 99p. But the salesman knows that the barrier for them, the hard part, was getting somebody to open their wallet, to pay the money. Once somebody has given you even a tiny amount of money, you are much more likely to give them even more money, and you are much more likely to give them a few £100s in the not too distant future. That is a technique that salespeople do. You can look out for it in anywhere where you get something that you pay a small amount of money to try something, and then there'll be a bigger payday further down the line. Now, that idea, you can use that on your own finances for positive influence. So you do something small that just breaks down the barrier of resistance to that journey. So you might decide to start building an emergency fund. You could use something like Moneybox. You could use something like Monzo, for example, that does roundup. So you can round up your spending so the loose change effectively gets put into a savings account. You then start becoming somebody who is saving for your future to try and protect it against something that goes wrong. You might be somebody who decides to save for their retirement because you haven't been. You might not be auto-enrolled. You might be somebody who wants to contribute a little bit more. It's just trying to do that first step in that direction. Another one is you might want to start to save and invest for your children's future. Just a tiny amount. You are then somebody who is investing for your children's future. That is very different to somebody who is thinking about it. It could be that you want to buy your own home, so you could start to save towards your first house by starting to build a deposit via something like a lifetime ISA. Some out there allow you to start saving from as little as £1. Another example is you may want to start to overpay your mortgage, even by small amounts. Now, there are apps out there that help you, but you might need to contact your lender and set up the fact that you want to put a standing order across, but you don't want the payments to reduce your monthly payments that you make. You want to keep them the same. So when you're making a small overpayment, that it starts to reduce the balance on your mortgage. Those small movements, those small things that you do will then change you into somebody who overpays their mortgage, even if it's only a small amount. That makes you a different person than you were the previous week. So I want everybody listening to the podcast to think about one action they can do this week that makes them something different or moves them in a direction on a journey that they haven't previously taken. It could be they decide to open a junior ISA and put a small amount of money into it for their children. So think about it. There is, of course, the Money to the Masses page that you can support us on. So moneytothemasses.com/podcast. There's a range of different products and services on there that could be things that you want to take advantage of, that you could get with cashback, for example, or even a discount. That's worth looking at as well. So try and do something this week that could make a massive difference. You could start a journey that could end up taking you somewhere that you never expected.
Okay, so we're nearly done on this week's podcast. We've just got a very short final piece, and I'm going to be talking about car insurance renewals. Now, when it comes to renewing, we bang the drum a lot, and most people know that in order to bring down the cost of your car insurance, there are things that you can do, such as paying for your insurance annually if you can afford to do that, and that way you're not having to pay additional interest on your monthly premiums, because that's how it works out if you pay it monthly. Of course, you can do things like improve the security in your car, ensure it's maybe parked off of the road. All of these things help to bring down the cost of your insurance. But there's been some research from Go Compare that's come out recently that actually gives us a little bit of insight as to when the best day is to renew your car insurance. And staggeringly, if you choose the right day to renew your car insurance, you could save up to around about 55% on your annual premium. So it's almost like now this is one of those key things you need to remember each year going forward in when to renew. So Damien, here's your quiz for this week. It's a number of days before your renewal is due. I'll give you that clue. And it's not like 50 or more. So it's under 50 days.
Yep.
So can you guess roughly how many days before your renewal is due is the best day to renew on, and roughly how much it might save you? And I'll give you the numbers in a second.
So this is something I've heard before. I'll admit to that. So this is an educated guess. So I am going to go with 25 days.
Do you know what? You're like the SWAT, aren't you? You're the guy at school that makes educated guesses, and he's always bang on, because you're pretty much bang on. So yeah, there's the spoiler for you. The actual answer is 26 days. So you're only one day off. Is from research, obviously it's going to be different for some people, but from research, 26 days before your renewal is due, that is the day that you should commit to your renewal. Obviously, do your shopping around and make sure that you get the best price. But if you make sure that you do it 26 days before renewal, you should be getting the best price. Now, the research that Go Compare did, the difference between the 26th day before the renewal and then renewing on the actual day of renewal is staggering. So in this research they did, if you renewed on the actual day that the car insurance was due to renew, then it would cost £569 to renew. If you could renew 26 days prior to that, then you would get it for £367. So it is quite a staggering difference. And actually from their research, only 2% of the people that renew car insurance do it that early. So make sure that you do it.
So I'm glad you didn't ask me the difference. So what I will say, a miss is as good as a mile. I was a day out, but the actual difference is quite staggering. I wouldn't have got that right. But then we see similar things when it comes to other insurances too. So the point is, don't leave it until the day before your insurance is due to renew. So I, for example, and this is kind of where I had a bit of a cheat. I set a reminder. So every year a reminder goes off in my phone that says to shop around, for example, on car insurance or home insurance, because then I can try and get the best deal. Don't leave it to that last minute. And I mean, this might sound relatively sad, but often I am chasing up the existing insurer for their renewal documentation, because I do want to make sure I do get somewhere near that 20-something day to get the best deal. So that is a great piece. Now, before we move on to closing out the show, there is something else I want to say to people. Do go check out our socials, because there's a lot going on our social media channels, in particular TikTok, Instagram and YouTube. There's a lot of content that isn't coming onto the podcast. It will never be on the podcast because it works better on socials. Now, some of that is clips from this podcast. Other bits are things that are unique to those actual social channels that don't make it to the podcast. Now, there is a bit of a teaser. There was a piece of content that is only, well, it wasn't even 7 seconds long, which I posted on TikTok yesterday lunchtime. And, well, in less than 24 hours, it's had more than 20,000 views. So what was that about? I think people will be interested. I'm not going to tell you. I'm going to try and encourage you all to go over to our YouTube channel, our Instagram, TikTok, follow us. Obviously, go to the Facebook group, facebook.com/groups/money to masses, and join. So please do go over there, interact with us, because it does help with the algorithms. Thank you to everybody who goes over to the YouTube versions of this show and leaves comments. And people are asking questions on there, and I am going to find the answers and respond to them. So that is fantastic. So please continue to do that. So that just leaves me to close out the show as normal, which I have kind of done with saying follow us on all our social channels. Do please make sure you leave us a 5-star review. That would be fantastic. And that helps again with the algorithms when it comes to the podcast. Do watch us on the YouTube version of the show. And Andy, I think that's, well, all that's left for this week is to say, well, until next time, and it's coming home.
Until next time, and it might be coming home. It might be coming home. I don't want to say it. Until next time.